With geopolitical events high on the agenda this week, we also look at economic data releases and how it will affect the markets. For this, we talk to Bob Mason of FX Empire. This is your midweek market drivers. Hello, Bob. Thank you for joining us again. Pretty quiet midweek. Markets seem to be recovering somewhat, but the top news is the geopolitical events taking place. How will they affect the markets?
Yeah, on the geopolitical risk front, we've got obviously social unrest, civil unrest in the US. That could escalate quite significantly, as people start driving into, protesters and so forth. So that civil unrest could escalate, and that could become quite disastrous for the US. And beyond. Racism has been a key issue globally for some time. So that's becoming, that's coming to a head. Then you've got US-China trade tensions, obviously, the whole COVID-19 issue, that's simmering, and that could boil over at any time as well. And then you've got Brexit, the chances of a hard Brexit continue to rise, as we approach that end of June deadline for a blueprint. So these are the key risks that we need to continue keeping an eye on, near term.
So Brexit, US-China, and the domestic violence going on in the US is the main topics to watch, I guess. But how about the economic calendars? Should we stop watching them altogether, or are they still important?
Ignoring economic data and the calendar is probably a dangerous move. There's a number of key stats that we need to keep an eye on this week. In terms of labour market, we got impressive numbers out of the US, better than expected. So initial jobless claims this week is going to be particularly important on Thursday. And then you've got consumer sentiment numbers out of the US on Friday. So we need to monitor those two. Also, New Zealand consumer sentiment figures are due out, so that's going to be quite important. We're going to need to see consumer confidence really pick up to support that recovery in service sector activity. From the UK, we've got GDP numbers, and they're going to be particularly dire. So is that going to spook the pound, particularly when you're considering Brexit woes and the rising chances of, a hard Brexit. So yeah, there are a number of stats that we still need to keep an eye on.
With fiscal and stimulus policies in full mode and monetary policy also following suit, how's that affecting going into negative interest rates? Should we be worried regarding that?
Well, it seems like the markets are clamoring for negative rates as well. That's been Trump's pet subject really in recent months, for the Fed to chop rates into negative territory. And then we've heard, even the BOE start discussing the subject of negative rates. From a Fed perspective, are they going to drop it into negative rates? The view is no. So Trump's going to be disappointed with that. So let's see what happens with the FOMC, interest rate projections and the economic forecasts, for this year, next year, and 2022. So they're going to be particularly interesting when you're considering these are the first sets of numbers that the markets are going to get a look at. So yeah, negative rates, there's plenty of talk, but it's a big step for the likes of the BOE and the Fed to deliver such a move.
It appears the Bank of England is reacting to government decisions. How about other central banks? Are they doing the same? And how can that affect the major currencies around the globe?
In terms of other central banks, I think we're getting to that point where, central banks are going to take their cues from the Fed. Obviously we've got the euro at 113s, we've got the pound at 127s, we've got the loonie at 133s, and this is amidst quite a dire economic environment. So are we going to start seeing this currency war, return that we've seen in the past? Which requires central banks to manipulate, as it were. Well, we don't call it manipulation, we call it monetary policy easing. But, some sort of movement to ease pressure on, exports, particularly for the likes of the Eurozone. That's going to be particularly interesting considering where we are at a monetary policy perspective. There's not much left in the tank, to really cut currency, appreciation and reverse it. So it's going to be interesting to see what happens. But let's say, for now, I think we'll take the cues from the Fed.
Well, that's all for today, Bob. Thank you so much for joining us, and I will see you again next time. That was your midweek market drivers with Bob Mason of FX Empire. Please remember to keep up with all the latest information and news, to follow us on our social media outlets.